Okay, let's start off now with lesson number 7, initial balance in the trading with market and volume profile course. So I already touched on this concept in the last video when we're looking at the replay, but the initial balance or the opening range, it's represented by the first 2 periods of a TPO chart after the open. It is a 1 hour range basically. So by watching if price breaks out from the initial balance, then we can see who is in control. Okay, so if we break above the initial balance range, large buyers are in control. If we break below the initial balance range, large sellers are in control. Now, it doesn't mean that just because we do break, above or below, it's guaranteed to be a trend day, because there's a lot, like you can see right here. We had the initial balance low here, and during period C, we came down two TPOs below the level, and then we went back up all the way to the other edge. So there is a lot, of false breakouts, etc. So there's going to be many strategies we're going to talk about later, but it is important to understand these concepts just because it is going to help us position ourselves better if we have an understanding of who is pushing the market. Obviously, like we talked about before, only the large or the other time frame traders are going to be like the institutions, banks, etc., that are going to be able to have the capital to actually move markets. So when we identify that there is a large player trying to move the market in a certain direction, then that's obviously going to be a big advantage when we're forming our daily trade plan. So on days where we have a wide initial balance, meaning that the first 2 periods are very big, in this case you can see right here how period A and B right there were very big. So you can see by this bar that we have right here that we had a very wide initial balance. Days with this are probably going to be ranging for the session. And here I have an example of a 5-minute chart. This is on the regular trading hours, 9:30 a.m. New York open. And you can see how we had a very impulsive move right off the open for the first hour of the session. Then we came almost back into the open, and then we did rally in the end and sort of just consolidated around the top. We did have a false break and failure off of the top of the range, but you can see how when we establish a very wide range, is most common that we are going to be spending the rest of the session or the day trading within this wide balance right over here, because this means that the large players most likely just got off their position or got their order fills early in the session. When we have a narrow initial balance, these are days that indicate we're probably going to be trending for the session. Why? Well, because it makes sense. If we have a narrow balance, there's a lot more chance we're going to see a breakout in some direction, okay? This example right here, this was on a news event, and I'm not exactly sure, I don't remember which, but you can see just from the size of this candle, there was obviously a very important data release that caused this reaction in the market. And this goes back to the concept we talked about right here. During this period, we had a low liquidity, low volume period where we open, and you can see the initial balance was very low. We did push above and came back inside. And then right on the data release, we had a very quick breakout and continuation. Okay, so if it's a narrow range, then there's more chance that we're going to be breaking from it and looking to follow that momentum. Okay, now the initial balances, there's depending what markets you trade, you're going to be tracking them in different ways. So the general rule for futures, this is, in my opinion, the best markets to track initial balances because they have well-defined schedules and they're centralized, meaning we're going to get all the precise volume and trading data coming in. So for U.S. equities like the S&P 500, NASDAQ, Dow Jones, etc., we're going to be tracking from 9:30 a.m. Eastern to 10:30 a.m. Eastern, which is when the stock market open. Okay, so this is the open of the regular trading hours session. That's going to be our initial balance in American futures. For European indices like the FESX, the DAX, Bunds, we track the open of the Eurex exchange in Germany. So pretty much the Europe Open, London, Germany, that happens at 3 a.m. Eastern time. So it's going to be the first hour from that open. Crude oil opens at 9 a.m. Eastern time. So we'll track from 9 to 10 a.m. Eastern time on crude oil. Gold opens at 8:20 a.m. Eastern time. So we're going to track the first hour, 8:20 to 9:20 Eastern time for gold. If you're trading the Forex markets, this is a 24-hour decentralized market. So there's not really a set official time, but in general, people like to split Forex into the Asia, London, and New York session. Asia sessions are pretty lackluster. There's not a ton of movement or activity in it usually. So London and New York are definitely going to be the main things to track. London Open is very important. And then New York Open after that. And the same thing, we would take the first hour from the open of these markets as the initial balance when we get a big injection of volumes and liquidity coming in. And then for crypto markets, again, they're 24-hour decentralized markets, 7 days a week. The initial balance is going to be set at the start of the trading day, which happens at midnight UTC. So in the US, that will be equal to 7 p.m. in the fall winter hours. And then when the daylight savings change happens, 8 p.m. Eastern time in the spring summer. Okay, so in crypto, the first hour of the trading day is what we would consider the initial balance for that. Okay, so again, we're going to talk more about strategies based around the initial balance later on in future lessons. So that's it for this one. Hope you've been paying attention and enjoying, and I'll see you all in the next chapter.